All right, so this is my first YouTube video ever, and this is just me going over the charts, get me, for you guys to understand exactly what's going on. The pairs that I normally break down are gold, USD JPY, Euro USD, and Bitcoin. This is our leading indicator for everything, which is a dollar. So I'm going to start with gold. For the previous week, gold has been very bullish. Get me? For a long time, gold has been very bullish. Gold is almost back to, or is back to its all-time highs. I caught a few trades from here to somewhere about here, sent out a signal from about somewhere here to the all-time highs, but it missed it just a bit. But we closed in some profits, you get me? The market has closed. It's now Friday, the 19th of December. All right. So what I'll be doing is just breaking down these pairs. Simple. I'm gonna make this a quick video, get me? For more in-depth details, you can send me a DM on Instagram and go over like with some one-on-one sessions with you guys, or if you're interested, you can join the free Telegram and you can get trade breakdowns and weekly analysis there as well. So for me, when I start to analyze the market, what I do normally is I do a top-down analysis as a lot of traders would do, typically to see exactly what the market is doing from a higher time frame down to a smaller time frame where you would take your trades. For me, I'm seeing where the price has been bullish. Typically, I don't use a lot of these. I don't use these indicators, right? These trend line things here because the trend lines really and truly isn't as important as you think. Because if you look at market structure and you see price creating higher highs and higher lows, typically that is a uptrend. For those who don't know what an uptrend is simply this, where price is here, price creates a high, pulls back, create a higher low, then creates another higher high, pulls back again, creates a higher low, and it does the same thing continuously. So in any market, once you see price creating higher highs and higher lows, typically this is a uptrend, a sign of a uptrend. All right. Where you look to get in on a uptrend or buys in an uptrend, we normally mark out the high points. Get me? Where previous support or previous resistance becomes support. We typically buy after it pushes, get me? Pushes back down and is continuing to go up. All right. So I'm going to explain all of this on the chart for you. All right. So this is it. Just get rid of this, delete. All right, on the daily time frame, we can use our tools to mark out the high points. This is gold's all-time high. Um, gold created at all-time high there. And that was back in the 17th of October. Typically, when a all-time high is created on gold, we can naturally see it come back to retest it. However, when it gets to that level, it normally a lot of sellers are there, selling off their assets. Yeah, I mean just cashing in basically. For this week, we see that it reached the all-time highs. Then we have this support level on the daily. We have another support level, is a higher high. And then we have one right down here. All right. Now, what would be looking for per se to enter? Or where would be looking to enter? If you go down on the 4-hour time frame on gold, typically you would be looking for entries. Let us say here. All right, just a moment here. Let us say, let me get to a good price action for you guys. Right here. So on the 4-hour, You see where price has been very bullish on the daily time frame, creating higher highs and higher lows. Price started to break below these lows, which to me would have indicated that this is a possible start of a downtrend. All right, let me mark it out here so you can see. So price created this low right here. Just a moment. Price created these lows right down here. Then it pushed up, creating a high. Pulled back, creating a low, and then pushed right back up, creating that high. After which price broke below, created this lower high, or lower low, created this lower high, then broke the previous lower, higher low structure to the downside. When it did that, it pulled back, creating a lower high. Then after which, what did it do? Create a lower low. When you see price doing this right here, typically we would look for sells below these areas with confirmation. In this scenario, price did not give us any indication. And what did it do? It started to pull back. Price started to go back in the direction in which it was going, which is bullish. Price created this higher high right here. Then it pulled back, creating a higher low because this low right here is higher than the previous low right here. When you see a price starting to break a downtrend structure, that's when you would say, all right, my bias now is going to be bullish. Then you wait for your confirmation for price to then become bullish. All right. When did price become bullish again? When it broke here. And then after it broke above these highs, which you have, I created these lines. You see where it just started to push and push and push. All right. So let me just mark that out for you. All right, just a moment. All right. So market has been going up, came back down, then it pushed back up, starting to go back in an uptrend. All right. Let me remove these arrows now so you can see clearly. Now that you understand that price right here was going down and then it reversed and started to go back bullish, what you'd be looking for is on the 4-hour time frame, you'd mark out your highs. All right. Highs that I'd mark out are right here. One. And another. Two. Where would you look to take trades? If unless you're swing trading, I wouldn't recommend taking trades on the 4-hour time frame. For one, 4-hour time frame will cause you to have a say a larger stop loss. Unless you're swing trading, that's okay. If not, if you're intraday trading or scalping, that would not be recommended. We recommend you go down to the 1 hour or the 15 minute. All right. So when you mark out your highs, then Lat, 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 you hear me? You busy? Oh my days. I was just calling you now. I was just calling you. All right. So, for what I was saying, I do apologize for the stop there. But what I was saying is now that we marked out our highs right here, you can see that price started to push up. But let us say we only had price, we could only see price from right here. Right, let me show you right here. Get me? You can only see price here. What you would do is typically I would typically go down on my 1 hour time frame. Get me? The 4-hour highs that I marked up, I would look for a break. All right. So right here, we had this previous high, price broke it. So anything above these highs are buys. Anywhere above here, buys. Anywhere above here, buys. All right? Always remember that. We see that price broke here. We're just waiting for the pullback, which is a correction in this area, for then price to continue upwards. So typically we look for a pullback in this area. Once we see price broke, pullback, and then a continuation. Where do we see the continuation? We see the continuation here. How would you enter? Why would you enter? Right? We would enter within session. So typically I use the sessions indicator by Junior FX Addict. You can look for that in indicators, type it in, Junior FX, JRFX. Not sure why it's not being found, but if you type session, you should see it pop up. All right. Once you enable that, you can, you will see all your sessions. London session, New York session, Asian session. I typically trade in New York and London session. What I would wait for personally is I had entered this trade from about down here, right here. And I took profits right here. That's the first trade that I had entered when I saw that price started to become bullish. Why did I take that trade? All right. Right here, let me turn the sessions off. Right here, we saw that price created this low. And this also is a lower high within this pullback. What I did was I marked off this lower high right there. Let me change that color. So price created that lower high right there. And then after which it pulled back, pushed back up, created a higher low and started to break. You would not enter on the break. What you'd wait for is a pull back. And then within session, if it breaks and when it breaks, that's when you'd enter. Where did you see session start and where did you see the break? So anything above here, this zone, you have buys as well, just as here and just as here as well. I'll turn on my session, wait for a session to start. We already see the pullback. We see higher lows being created. See higher lows being created. And then we saw a higher high, which means structure has changed to bullish. The London session had started right here and I had entered. I zoomed in on my 50-minute time frame. On my 50-minute time frame. Zoomed in on my 50-minute time frame here to then enter within session because typically I recommend persons enter within the 50-minute time frame. All right, that's the best time to enter. You can enter on the 50-minute, or if you see on the 5-minute any sort of entry confirmation, that's when you'd enter. So on the 50-minute, after we see price start become bullish and started to break these highs, it pulled back. Within session, with out of session, Asian session, it pulled back. The following day, it started to become bullish again. It broke above this 50-minute high, lower high that was created. Get me? Broke above here. And why would we take a trade immediately? Because on the 1 hour and the 4 hour, we saw bullish confirmations. So after the candle had closed, this is where I entered. I remember precisely. After we had the 50-minute close off candle, no, it wasn't here. It was literally, yeah, it was there literally before session open. And I put my stop loss below the lows here. All right. So we saw where price created, broke these highs, then started to push. We got a bullish engulfing candle within before session open, price started to drop. However, the momentum wasn't in the market because market started to turn bullish. Market started to push, 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 And market doesn't go in one straight direction. It goes up and down, as you would see here, up and down. And then, that was our entry for the first trade on gold. Get me? So we waited for price to break, pull back, and then continue above our area. The other trade that I had caught was right here as well. Let me find it. 1 hour. The other trade that I had caught was right here. I'm gonna find it for you guys. This was an amazing trade. Um, I love that trade. Right here. Two trades we caught right here. So for one, why did I take this trade? I took the trade from about right here, posted it on my Instagram. Why did we take that trade? After we see price pushing up, take off the sessions. After we see price pushing up, after we had exited here, we saw price continue. We could have taken another trade, but we didn't. We were satisfied. Price started to push up. Bullish, started to be bullish. Then we had this area of interest, which is a resistance now turned support. Price pushed, came back down into these areas. However, it wasn't ready because it on the smaller time for 1 hour time frame, you see where prices just kept creating lower highs and lower lows. So I was thinking that, oh, price is just not ready to move as yet. And then within these times, I think we had some we were waiting for some news to come out and et cetera, et cetera. So I had waited. I saw where price started to break these highs. Price started to break these highs, creating a higher high. Then I saw it pull back. After which I got another confirmation that price is definitely still bullish where it wasn't breaking below these lows. Once you see price not breaking below the lows, then yeah, price is definitely bullish. Unless you see a break of those structural lows, then you know that buyers are still valid. Then I saw where the news had came out somewhere around here, I think, yeah, right here on this date. Let me turn on the session. Yeah, it was right here, New Year. So you see where this price action was a bit choppy, then you had a massive spike. This was after news. It grabbed the orders and it pushed up. This was another confirmation for me to enter. However, I waited until it was the other day. The price had pushed because I know there was going to be a bigger push. I waited until price had broken these lows or broken these highs in this area. Waited until it broke these highs, pulled back, and then took my trade. Where I took my trade was right here, specifically. I remember on the close of this 1 hour candle. This was an amazing trade, I'm not going to lie. It was right here. I took the trade right here, and I ran the trade up to here, literally to the tippy top. All right. My stop loss was below these lows, wick lows, because this was where news was. It already grabbed orders, then started to push up. I waited for a session to come in because if you look, this 1 hour candle is without out of session. I entered out of session an hour or two before session started, and then I waited for price to kick in, the volume to kick in, London session, the New York session. And exactly what I had expected, that's what happened. We do not try to predict the market. We react based on fundamentals and market structure. Price broke above the highs, pulled back, and I took buys above the highs. Okay. You also have this 1 hour high, lower high that was broken. All right. Price broke here, pulled back, and this is exactly why I had entered. Boom. Went up, went up. I'd actually, this was the first position. I passed the funded account with this position. Then this was the second position that I'd entered right around here. And then I'd entered a third position. I'd entered a third position somewhere in the middle of this price action right here. So I had three positions open, and I sent all of them out to my persons in Telegram and even on my Instagram. So I have a lot of persons who caught this move and we're very happy with it. But it's the same thing. Just breaking this down. It's the same thing we do over and over. We just wait on price action to give us that confirmation. And we just utilize a good lot size to make that profit. We do not have to trade every day. Um, you know, so yeah, right now price is really and truly just consolidating at the higher, where the all-time highs. But yeah, those are all the trades that I took on gold. And everything was good.